What's up, guys? Welcome to Roensch Capital Charts. Today we're taking a look at SoundHound AI stock, ticker symbol SOUN, on a variety of time frames in anticipation of the next trading day, Tuesday, March 12th. All right, guys, SoundHound AI stock here today, up 12 cents a share. That's plus 2.05%. It is up 8 cents in the after hours, which is not, a tiny move by any means. If we take a look here, after hours, that's about 1.5%. We have to take after hours always, whether it confirms your bias or goes against your current sentiment. We have to take it with a grain of salt. That's just the reality. Volume is incredibly low. That goes for if it's dumping or pumping to the moon. Of course, 1.5% move is not an incredibly large move, but the real test is always the open the following day. Now, let's get started here by starting with our daily ritual of every stock that we take a look at here on the channel, our volume profile analysis to try to pull out some bias from the movement on the intraday session today and see if there's anything that can help us determine what the larger sample sizes we're kind of thinking here today on SoundHound stock. Now, guys, SoundHound was the winner of today's wild card stock. It got the most votes in the comment sections of the weekend's batch of videos. Be sure to leave your vote down in the comment section. Just comment the ticker you'd like me to cover as the wildcard stock tomorrow. So that's Tuesday's trading day. And whichever ticker gets the most votes will be the wildcard stock that I cover. Now, looking here at the volume profile, you guys know what I'm looking for, right? I'm looking for big changes in volume that show consistently out of context volume, but it has to correlate with a very obvious move in stock price. That tells us that a bigger sample size than what would be expected at that particular time of day agreed with that move over the surrounding moves. So what I'm really interested in is this pop and fade off the open. Okay, this move here is very obvious as well, and that fade to follow. And then this move here and the fade to follow. It looks like here you see, okay, this pop and then fade. It ends up essentially to be a net neutral. It ends up back in kind of the same spot. But what I think a lot of people overlook is that these moves don't necessarily have to be created equal. And we'll see if they were by taking a look. But let's start with the move off the open here. Now, you can see that we actually got a relatively reasonable 1.5 million shares off the open. We typically expect the open to be, at least on most stocks, the highest volume candle that we get on the day. That's a very common occurrence. But here, on that pop, we actually saw ascending volume. Now, it wasn't so extraordinarily out of context, but it definitely is a little bizarre compared to what you would typically expect with that kind of U shape, right? That fade off the open in terms of volume, and then that lower right side typically into the close. So bulls, there's a little something there, but I got to be honest with you. For me, it's not really quite contextual enough, like out of context enough to sit here and say, like, yes, there's some clear bias there, because I prefer to see at least 3 or 4 consecutive candles of consistently, relatively consistent high, again, out of context volume. And we saw ascending volume, but it wasn't so extraordinarily bizarre, right? Now, in terms of the fade, we did see the volume come down pretty substantially, which I think gives a little bit more meaning to the bullish volume. But let's move on here, okay? We saw big pops in volume. Now, it's only on one candle. I would actually prefer to see about, 1.2, 1.5 million on 3 to 4 consecutive 5-minute candles, then see about 2.5 on a single candle. But I think it'd be difficult to sit here and try to argue that that's well within context. So bulls, just the sheer size of that one candle, again, while there's not consecutive candles that really show consistently high volume for a longer period of time, there was certainly something there. Likely a battle that took place between the bears and the bulls came out victorious. That candle wick up top also supports that theory. So interesting, very interesting there midday to have that much volume occur on a single 5-minute bar. And then bulls, really interesting here again. We got this pop and fade. This was the example we discussed, right? Now, what's really interesting is, sure, it wasn't incredibly consistent, the volume here, but we got 4 candles that were quite a bit higher than any selling candles surrounding that move. The fade candles, or that fade in general, saw much lower volume than the pump. So I'm looking at this, and I think it's pretty hard to deny that, okay, in that moment, we got a larger sample size of market participants that agreed, hey, SoundHound belongs higher, then agreed that it belonged lower on the backside of that move. So again, not all moves are created equal. And I think that right there goes to show that. Now let's move on here and take a look at the self-fulfilling prophecy psychological levels here on SoundHound stock that I'm watching extremely closely come tomorrow, Tuesday's trading day. Now you'll notice here in the last 3 trading days, including today, back here on Thursday, right, we were struggling to reclaim. We were bouncing, ripping off that 50 period with a lot of volume, but we struggled to reclaim that 200 period into the close. We made another attempt last Friday, a little bit of struggle intraday on lower volume, and then a relatively clean but kind of tight reclaim of both of those, or the 50, well, also the 200, but of course the 50 moved upside, right? So the 50 ends up being the one on top. The crossover itself means nothing to me. It just helps get some feet underneath an upside move because that 50 period is a quicker moving average. But at the end of Friday, we found ourselves, above both until the after hours, which we always have to take with a grain of salt, but it faded below in after hours. Okay, it is the real price, so we have to consider it. We can't just completely write it off. But now today, interestingly, we opened below the 50 period, popped above on slightly above average volume, I'd say, lower volume pullback, and then higher volume pull away, and closed above the 50 period. Listen, this is like the kind of move that I'm constantly discussing. Now that doesn't mean that, we can't get a catalyst here in the next day or two that tanks it off. All this means is that in the very short term, that's a relatively clean reclaim of the 50 period moving average. Higher volume above average volume break, lower volume retest, and higher volume pull away. We're constantly discussing this. So bulls heading into tomorrow, listen, any retest of the 50 period, going to want to see really any volume on the initial retest since we've already reclaimed it now, but ideally high volume bounces away. Okay, if it retests it 2-3 times, fine, just high volume bounces away, especially on that last pull away, and ideally closing still above there. All right, bears, you guys, we're discussing one at a time, I think, here, because a move all the way down to that 200 period is about 7.6, 7.7% away. We've seen crazier things out of SoundHound, but that 50 period is more reasonable, 3.1, 3.2% away. Bears, a great day for you guys on the 30-minute chart here tomorrow would be to give up, right, that 50 period, close beneath that level. Break downside through on high volume, kind of the opposite of what we saw the bulls pull off today. Break downside through high volume, lower test retest, lower volume retest, right? And then higher volume downside break. Now, let's move on here and take a look at the 4-hour chart and see if that is contextual, and it's very much so in play right now. So let's take a look at this 4-hour. You can see here that we have been pretty indecisive about that 50 period on the 4-hour chart as of late. We're sitting right on top of it. We're about 15 cents away as of right now. Listen, bulls, really simple here. Any retest of that 50 period on the 4-hour chart, going to want to see a hold. All right, really on any volume, in my opinion, except for below average. Bears, you guys want to see a high volume downside break. Very similar. If we see a retest, ideally the retest is on lower volume, and then the pull away back to the downside to claim that as resistance is higher volume. Or just a clean downside break on a lot of volume initially and not necessarily any retest. All right, really simple here on the 4-hour chart, which brings us to the most important chart of all, which is the highly contextual, highly psychological, and very, very heavily watched daily. Now, you can see here, the moving averages are not in play at all. I mean, the 50 period is the closest one, the 50-day, I suppose, and it's at about 305, 304. And the 200 period is 200-day, is even lower. Keep in mind now, this is the daily chart. It's only going to show the closing price of 598. The stock is at about 608 as of this recording in the after hours. Okay, but again, we have to take after hours with a grain of salt. So the most obvious story here tomorrow is the story that I want to look at, because that's the story that the most other eyeballs and algorithms are considering. And the story here tomorrow, guys, is the story, the battle of $6 a share. Now, the real price is the price in the after hours, but remember, it's on low volume. So bulls, a hold of $6 a share, whether it's through tomorrow's open, fine, but I think the most important time frame is that a close above $6 a share, spending as much time as possible with as much volume as possible intraday and during the intraday session above $6 a share, and then closing inevitably above that level. That's a big power move out of the bulls if we can pull that off tomorrow. Bears, same deal, but below $6 a share. Okay, crack back, because of course after hours we're above there, crack back down below 6, spend as much time as possible below that level with as much volume as possible intraday, and close beneath that level. The reason I say that is because like a really low volume, like say like Bears for example, if we were to hang out above 6 a share all day long tomorrow on tremendous volume, and then in the last 10 minutes of the day on really low below average volume, we kind of fade down to like 598. To me, that's not really a definitive break. That's why I think spending time above or below on high volume, or at least slightly above average volume throughout the day is important. It gives the market enough time for a big sample size to come in and truly decide that that's the proper place that this stock belongs. Now, let's take a look here. My favorite part of the video, what was the bias of the options traders here today, Monday, as they position themselves heading into tomorrow, Tuesday? So remember, on SoundHound, the volume is going to be a little bit lower, so you have to take this with a grain of salt, but we had 74,000 total contracts traded, 55,600 of those were calls, and about 18,400 of those were puts. So we did see a rather heavy call side bias in the overall call put ratio here today, but if we break this down by delta range, listen, every single delta range is leaning call side heavy except for that short-term speculator delta range of 0 to 20. That one is a little more indecisive. 5,200 calls and about 6,000 puts. Not nearly as overwhelming to the put side as the overall ratio is to the call side, but of course that overall ratio, you have basically the 21 to 100 delta, all four of those ranges to thank, all four of those leaning call heavy. Don't forget to leave your vote, comment your ticker in the comment section, and I may just cover that stock as tomorrow's wild card stock. And if you got value out of this video, please leave a like, subscribe to the channel. I greatly appreciate it, and I'll see you in the next one.